What's up, everybody? This is Jimmy with Trading Decoded. It is January 22nd, 2024, and I don't like it. I'm sorry if you can hear my washing machine in the background. It's doing a load of heavy clothes, and it's rattling around like crazy. With that said, what don't I like? I don't like being at all-time highs before the open. The only reason is because I've got no proven levels high to aim for to the upside. It's not that I care that the market goes up and down. In fact, I hope it goes up and down because that's how we make our money on a day-to-day basis. But trading in untapped and uncharted territory is not my favorite thing to do. However, let's go ahead and launch a chart and see what we were doing in the pre-market. In the pre-market, we were in a pretty tight range. I was happy to see us pull down at least to the bottom of that range whilst coming up to our pre-market midline. Now, today was one of those days where it was kind of a weird call put scenario, okay? We wanted to get in above the pre-market midline, looking for the move to 484.40, maybe to the next line. But 484.40 was the target. Likewise, if we opened above that line and got a candle close below the midline, we were looking for the move to go to 483.80. We opened below that line. We were trying to breach above it, The wicks on the bottoms of these candles gave the majority of us who took the trade the confidence to try and go high, understanding that if we were to close back below these wicks, that we'd stop out of the trade. But we were looking for the move to continue up. Finally, we broke free. Now we have some people that trade conservatively and they waited for a candle close above that line and they got in which case there's only about a 20 to 30 cent move for you. Fine. And that's if you got out here, guys. Obviously, it continued to move up from there. But on these opening trades, we're accepting the fact that they're aggressive, right? So aggressive entries, aggressive exits, meaning we're not looking for much. We're trying to get in, we're trying to get out, we're trying to take a little piece of the pie and be happy with the trade. Had quite a few folks jump into this trade pretty early and took it to the line. Some held for longer, and that's fine. Okay, now this purple line here, this didn't exist until we created it at this point. So once we can get above this line of support, we were looking for it to hold as resistance. We were hoping it would get over and hold as support. It did, and we made it to our next target high. Now these lines today all came from pivot points and Fibonacci retracement levels and futures lines. Okay, these are not levels that we have ever touched before. Okay, so we at least I play a lot more hesitant in this situation. That there was a 20% trade, depending on when you got in, and much more for people who held longer than that. Okay, then we had a nice uptrend going, and then we broke that trend, and then we put in lower highs, and we started to trend down. And while we were up here, people were asking me, Jimmy, where would you be interested in puts? I said, well, if we can get back below 484, I'd be looking for that move to at least 483.80. That's all. So you knew way up here where I'd be interested in puts and where I'd be interested in taking it to if it got there. Well, we breached that level on this candle. I got into my puts. We got to the next line and then some. I got out of my puts. I made money on the trade. I was done for the day. Could have been done after this one. Took this one. Done. Several folks took that trade as well. We had people very early in the day that were done quickly, which is always a beautiful thing to see. Because that means people are getting in, getting their money, and going about their business and doing something else, guys. The more you trade, it doesn't mean the more money you're going to make. It's just you'll find this out the hard way eventually. And I'm sorry if you do. Then the last thing that we talked about as far as trades, we had a nice downtrend going. I said, well, if we can get back through this line of support right here, we'd be hoping to make it down to 483.02. We breached that line of support several times, but we got our first candle close below it here. If you got in at that candle close, You had a 32-cent move or a 30-cent move to the target. Didn't hang out down there long. Yes, you had to be quick, but it did what we wanted it to do. It provided us the trade. Now, I didn't take this one, but again, when people are asking me, Jimmy, where would you be interested in buying another put? Well, I'd like to get below this proven support level here before I consider doing that. And where am I aiming? To the next support level. Now, I would have loved to have seen a gap close down here at Friday's high day at 482.72. We didn't get that till later in the day. But guys, once we got into this area here, I don't care what strategy you're trading. This was a very uncomfortable time in the market. And when I say uncomfortable time, I mean, you weren't feeling really good about calls in this area here. How do I know that? Because I was watching the contracts and I was watching the price action, and I was glad I was not in a trade. In fact, it was at that time that I told everybody that between 483.50 and 484.50, no trade zone for me. None. I wasn't interested at all. What you had going on in this area here looks like you could have made good money, but you better been quick and you better been concise about what you were doing. Nothing in there interested me. When you're going when you're in calls with all of these wicks on the tops of all these candles, that does not feel good. Okay, if you're looking at that, understanding what that means that there's sellers stepping on your head the entire way you're trying to climb up that mountain. It's uneasy feeling. And at some point, the weight of them stepping on your head, you have enough of them on top of you that it's just going to make you fall off the side of the mountain. That's what's going on here. No, thank you. So you're not going to see any more trade suggestions from me on this because we kind of stayed within that range for the rest of the day. We fell outside of the 383.50 area quite a few times, and then we just started to stop short of that next target low too often. So now you have, okay, so here's the 383.50. We break through, we get to the line. We create a new support here at 483.35, one here at 483.20. So naturally, when we get through that 50 line again, can we just say, yeah, it's going to make it down to the yellow line? No, we can't, because now we have support here to worry about and here to worry about, which is exactly where this guy stopped. So if you want to take the close below 50, you have to accept that your support now is here, not the yellow line. But Jimmy, why do you say that? Because we stopped moving low. We couldn't find a price that would close below 483.20. So we know that there's buyers there, and the sellers that tried to keep us down there didn't succeed. How do we know that? Because every candle closed above that level. Wicks on the bottom, wicks on the bottom. Buyers are existing down here. It's not a surprise that they were still there when we got there again. Okay? We get down to it. Again, same area, buyers, same area, buyers. This time the sellers are getting stronger. We're coming off lower highs. This might be a chance we can move lower. Was I going to play it? No, I wasn't. We almost closed the gap. We got within just what is that? 6 cents? 6 cents away from Friday's high. Bounced off of it, then ran right into 484. Couldn't get through that. Right back down to the yellow line. Choppy, chum. No good. And that's pretty much it, guys. We're not going to talk about a lot in this chart because there's not a whole lot to talk about. I am happy that we closed below all-time highs. I'm happy as long as we open below all-time highs, because now we can have levels to aim for that are proven levels of resistance for tomorrow's chart. But if we gap up overnight and open at all-time highs again, we're going to be in the same boat. At least I'm going to be in the same boat, and it's not where I want to be. So I'd prefer that we stay down here. I'd prefer that we stay below yesterday's price action, which will be today's, but tomorrow. And so we have good areas of support and resistance above and below wherever we open at. With that said, I hope you found some useful information in this video. If you did, please like, share, and subscribe. I'd appreciate it. If you'd like to join our Discord community, where there's a link down below, we'd love to have you. There's a bunch of people in here. We have 2 trading rooms in there now. Mine, which is a short and sweet, trade the first half of the day for the most part. And then you've got Paulie Bag of Donuts, 920 trader. He likes to trade all day long. Some folks like to do that. I don't. But if you're that guy, we have somebody for you there. Okay. Both of these strategies work very well when implemented properly. You just have to execute the plan, whichever plan that is. You could trade something completely different. But the beauty is if you understand price action and how to read a chart, you can apply that to any trading strategy, and it should help you become a better trader. That is the goal of Trading Decoded. We're trying to teach you how to be better traders, not keep you as dependents. I don't want you to depend on me. I don't want you to depend on our group. I want you to come in, take advantage of what our group has to offer, and apply it to your own trading so that you can do this all by yourself with confidence. That is the goal of Trading Decoded. Also, I don't know what else. Anyway, check out our website, www.trading-decoded, and we'll pick this up tomorrow. Hope you all had a fantastic day. Till tomorrow, I love you guys. See ya!